All right, so hopefully you guys can hear me in this video. I know that the audio on the other video that I had recorded was not good enough, so hopefully you guys can hear me. Hopefully everything is fine. Um, in this video, I am going to be speaking about the clouds of liquidity. It's something that I've mentioned so many times on Instagram, and I've made 2 videos about it. And even in the other videos that I've recorded on this channel, I've mentioned this term a lot. And I think most of you guys don't understand what I mean by that because I speak to 1 or 2 of you guys, in fact, maybe even 4 or more watching this, right? And I say this term, and most of you guys don't really understand what this means. So I want to hone on this thing again and again and again. And I don't really mind repeating things over and over again on this account because I just end up, teaching myself stuff. And I obviously want to teach you guys things. And obviously, this is for people who actually want to trade. If you don't trade and you're just watching just for fun, then that's fine. But this is mostly for people who actually want to trade. So, right, the clouds of liquidity. This is something that I've said a lot. I've said the clouds of liquidity on a number of posts. I think I've made a post about it, and it shows a chart about the Euro US dollar, or I think NZD USD, and I drew a cloud, and then there's like a money sign indicating that, okay, there's money over there. However, I find that when I speak to people about this, they don't actually understand what I mean by the clouds of liquidity concept. So let me actually draw a fake market, right? So let's just see if this actually works. Right, it works. So let's just say this market that I'm going to draw right now, let's just say the context for it is bullish, right? So let's just say, yes, it's bullish, it's going up, 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 right? And then it breaks down, fine, okay, cool. So I've drawn out this market. I'm going to call this market DONSLUVSFX chart. This is a price action showing a market value of DONSLUVSFX, right? If there's even such a thing like that. No, there isn't. But so we've seen that this has gone long, and then it's broken down, right? So essentially what liquidity is, it's where orders are in a market. So orders are stop losses, take profits, positions within a market, buy stops, sell stops. It's basically any single one that's buying and selling. That is an order, and that is virtually, it's basically money. So therefore that's liquidity. Now imagine millions and billions of those orders, because there are a lot of people that are getting involved in markets every day, right? There's hedge funds, there's banks, there's bigger banks, there's the Saudi Arabian sheikh, the billionaire in Saudi Arabia, there's the billionaire in America or South Africa or Australia or Brazil or wherever, or even just a retail trader like myself, like you who's watching this, if you are trading, like someone in their mom's basement with only $20 in their account who watches Cornhub. I said Cornhub, by the way, I didn't say the actual word. And they probably have no friends at all, people like that, just people who trade. Everyone, that's liquidity. It's orders in a market, right? And just for extra information, time frames, right? Like what you're seeing up here, these are time frames. These are just ways to gauge how those orders are getting involved in a market. And obviously it's mostly bigger banks and stuff. Retail traders, we probably won't have that much influence in terms of the price action itself, but there is said to be what is called the composite man, who is said to control price action. I'm not really sure who controls the market, but whoever is controlling this market, whoever is taking price to wherever it's going, that is a way to gauge how they are getting involved in a certain asset or in a certain instrument or in a certain market. It's through time frames. And each and every single time frame, you can see a similar pattern or a similar trend of where it wants to go, right? It's going to do that in a way that it won't all look the same, but it's also about understanding what it wants to do versus what it is doing. And if you can understand that, then you will understand that over time that this market over here, so the DONSLUVSFX market that I've just named right now, this ugly sketch that I just drew right now, we're just pretending that this is price action, right? I've just drawn this, and over time, price has gone up, right? So fundamentally, in this little sketch over here, which we are pretending it's a market, right? It's price action. It's going higher, right? That's fundamentally what it wants to do. But what it is doing could be a different thing, because it could be breaking down, it could be going short, it could be going higher. But overall, what it has done is that it's gone higher. The price has gone higher in a certain time that has occurred, right? So, like I said, liquidity, it's orders in the markets. How those orders get involved, you can see it through looking at different time frames. Now, the school of thought, because there are schools of thought that exist and how people get involved in markets, right? Because now we've already established that liquidity is orders, right? It's people who are buying, like imagine people who are buying. This is an order right here, and then there's people who are getting short, right? So these are orders. These are basically orders that exist in a market. This is liquidity, because this is money. That's what that is, right? So imagine that in this sketch we drew over here, that's right in front of you. In fact, we don't have to imagine it, it's right there. Imagine this is a supply zone over here, because the price dropped over here and the price went up over here and it dropped over here. And you can see it started to move around and it started to move higher than these points, right? So let's just say that this sketch over here, it's bullish. It's going to the upside. Now, what happens is that when there's a bullish market, and it could be vice versa for any single market, right? But in this case, right, this market's going long and then it breaks down. This breakdown over here, people would start to short or would start to look to sell this asset, right? There's there's probably 3 schools of thought, right? So there are people who have already been short in these markets. There are people over here that have probably opened their sell positions over here somewhere. They're probably selling here. I probably need to use a different color so you guys can actually see what I'm talking about right now. So let's change the color. There are people who are actually getting short over here. They're getting short over here. They're getting short. Oh my word. So they're getting short here. They're getting short over here. And they are in shorts, right? And they're probably in profits because the price has moved lower from their positions. And they have stop losses on those shorts, probably resting over here somewhere, resting over here somewhere, resting over here somewhere. There probably some stop losses, right? That's normal. That's fine, because if you're trading like that, that's okay. However, that is still liquidity. Those stop losses and these orders, that's still money that's resting over here. The second part is that when price goes up and it starts to increase, people will look left and they will see the last upward move before the down move. So they would see an area in which price moved away very quickly. And when I mean quickly, it moved down, right? Within a market that's proven to go long. So people will look at that and they would say to themselves that, okay, if price goes back to that area, they would look to go short or they would sell. So then what happens is that when price starts to increase here over here, you can see that, oh, it's equal to this high over here. They would look to sell. They would look to sell. They would look to sell. And yes, in the short term, they could be right. But that is a second school of thought. And that is the first school of thought that I've just mentioned right there, where people are in sells currently and they have stop losses. And the second one is where people look left and they look at supply zones, or they look at the last upward move before the down move, and they say that, okay, that area, there must be some sort of supply over there. So then if price goes back to that area, they will look to sell. The third part is where people start to martingale or start to average out, where if price starts to increase, they say to themselves that no, it's time to go short. It's time to go short, because they've looked at this and now all they're doing is just going short at any single moment in time. And they are in losses, but them averaging out is basically taking like a 1 lot trade, right? But they're opening like 10 of these 1 lot trades. So they're opening 10 0,1 lot trades. So obviously 10 times 0,1, that's 1, right? So yes, instead of opening 1 lot size trade, they open 10 0,1 trades. And that's martingaling on, that's averaging down on the positions, right? So then if the price had to go into their direction, they would still make profit. But that's also a third school of thought. And all of this put together, all of these three schools of thought is what generates that cloud of liquidity, guys. That is what I mean by clouds of liquidity. Because if you actually establish a context within a market, right? If you already know fundamentally where price wants to go versus what it is doing, right? You know that price over time wants to go long. It may not be doing that, it may be doing that, but you know that over time it wants to increase in value. You know that people on some time frame, on some whatever brokerage they use, whatever, their mom, their dad, the signal group, I've seen this before. Like every single person, when they say to themselves, let's buy low and sell high. It's a perfect concept, or it's a perfect thing to actually also gauge this cloud of liquidity, because you have an understanding that price wants to go long in the long term, or however long it wants to do that. You understand that price wants to increase over time. You know that this breakdown that just happened is nothing more than a reaccumulation to the top side. You know that, hopefully, since you've watched my videos and since you've followed me, you should know that by now. That's what this cloud of liquidity is. Because there are millions and billions of people who think like this, who are on the wrong side of trend. And what happens is that these types of moves, let's just change it back to green, right? What happens is that now, every time the market actually starts to move, it will move in such a way where it would absolutely smack all those orders out. All those types of orders would get liquidated. You would probably see runs. You'll probably see where a run on those orders, like price wouldn't just move up like this, right? And just like do this, but then gradually you can see it's doing that, right? In most cases it does that, but when it's running those orders and when it wants to liquidate those orders, so people are selling, right? But then the price is going higher. So those people will be in losses, or they would lose, they blow their accounts, or basically they would get liquidated, right? Those types of moves, when they happen, would tend to look like this and absolutely expand. Sometimes they would just expand and you get a little bit of a pullback, which is what induces more selling again. And then you just see, boom, the price just explodes. It expands, dramatically. And this is actually where big banks, hedge funds, and where people actually blow up. This is where you hear those stories where this bank in Silicon Valley lost money because of this whole thing of cloud of liquidity, where they're on the wrong side of the trend. So even though they make money, right, in the short term, that money will get lost in the long term, because short term, yes, it's going in their direction, but then in the long term, they could be wrong about where price wants to go, because it's just basically understanding that you may be a seller and there might be a selling market for about a week and a half, or maybe even 2 weeks, but the market is going long over a month. So in 2 weeks, it's gone short or it's gone lower, but then in a month, it's going higher. So in 2 weeks, you'll probably make money, but then in a month, you will probably lose that money, because that's not where it wants to go overall. And that is why those trends will sustain themselves if it's a bullish trend. And if it's a bearish trend, it'll be vice versa. This is why trends sustain themselves. It's because of this whole cloud of liquidity. And just remember that 3 schools of thought. It could be more than that, but those are one of the main things that happen, where people will look at equal highs, and if price returns to that area, people will look to sell in those areas. And again, that's where money is getting pumped in. It's getting pumped in through those orders. And people, the second part is also, people have already gotten short on the way down. So they've caught in their short, they've been in the short trades. They have their stop losses above the entry position of where they entered in those trades. And yeah, they are in profit, right? But again, their stop losses are still liquidity. It's still orders. So that's money, again, sitting above. And the third thought or school of thought is also people who average down. So instead of opening a one lot trade, they open 10 0,1s, or they, if you want to open a certain if you want to open a certain size of a trade, you instead of opening one, you open many of them, where it doesn't put you in a bigger loss if you had to open just one trade. So that one trade, that the one lot size trade won't mess you up. You open 10 0,1, and that's the school of thought that those people have. And that is also money, that is liquidity, that is orders. So then you put those orders together, and you have millions and billions of those orders, because that's just how many people are getting involved in markets every single day. You have what is called a cloud of liquidity. So that is what I mean. And it's that cloud of liquidity which will get liquidated over time. But you'll only know when it's occurring if you understand the underlying trend of where price wants to go in a given market, or whatever instrument or whatever market you're looking at. You need to understand the context first before you can even identify, okay, there's people who are selling in areas they're not supposed to be selling in, or there's people who are buying in areas they're not supposed to be buying in. That is what I mean by the clouds of liquidity. And I did speak about it in these two videos. I didn't speak about it as well as I did in this video, hopefully. But in this video, I've spoken about how gold started going long from about the end of February this year, at the beginning of March. And I spoke about the exact same thing, because once you guys see it, you can't unsee this thing. Like it becomes in your arsenal, and it will become part of your trading if you can understand this concept. And the cloud of liquidity concept is not something where you use to find trades. It's just something that can help you confirm that bias, or confirm that, thing you have where you say to yourself, okay, a trend or a market is going long. And it will just confirm it by looking at price, and you can see that, okay, this price is just continuing to go long if it's in a situation, or if it's fundamentally going higher and higher and higher and higher. That is what the cloud of liquidity concept helps you with. It doesn't help you find trades. It just helps you understand where money wants to go. And if that money wants to go, or if that trend wants to go, it will go. And it will go in such a manner where it won't return to previous lows. It will just explode. And those are the types of moves that mess over big banks, that mess over hedge funds. Those are the types of people, where you hear these stories where this guy lost R1 million or $1 million, and now his wife is divorcing him. He lost his house and everything like that. It's because of moves like that. And those types of moves are so potent that if it expands, it generally doesn't return to the area where it started. It will just keep going and keep going. And the reason why it will keep going is because now people will still look to get short in those areas. They will still try and sell it if it's going long, and people will still try to buy it if it's going short. Like, for instance, right, I think I saw something about 2 hours ago on Australian dollar CAD, so odd CAD, right? I looked at this pair, and I saw the same thing that's happening again, or potentially the same thing that's happening again. So I went on this. I like using this a lot because it helps me see that cloud of liquidity when it's happening. It only occurs it's like a once in a while type of thing. But again, like I said, once you've seen it, you can't unsee it, and you will know that, oh, okay, an asset wants to go long or it wants to go short. And you understand that if a market is going long and then it breaks down, you understand that that breakdown is not time to go short. It may be time to go short term, or it may be time to sell it in the short term, but you understand from a long-term point of view that it's still going higher and higher and higher. And what's making that market go higher and higher is the cloud of liquidity. That is what makes markets trend, and that is what makes trending markets so powerful. And that's exactly the types of markets where you actually want to be a trader in. So I looked at OddCAD, and over here on the MyFX book, the sentiment, right? It just measures in instruments such as like forex pairs, futures, all the pairs that people trade, right, all over the world. It measures those um, instruments and it gives a sentiment. So these sentiments are from like retail traders, just people like me and you, just average people, even banks, even hedge funds, every single person in the world, right? So I lost it now. So odd CAD, it's 74% short and about 26% long. So the bias or the community trend or what people are feeling towards this pair, the Australian dollar and the Canadian dollar, people are saying that this is going to go short or it's going to go, the price is going to decrease. And there's about 62,000 positions. So there's 62,000 positions that are going short. So that's money resting over there. So 74% of the orders are to the top side, right? Because people are selling. So basically all the orders, right, are over here, are over here, are over here, are over here, are over here somewhere. They all over here. That's what that means. And they're saying that 74% of them are actually resting up here. That's what this thing is saying. And then only 26% of the orders are resting down here. That's what this thing is saying. So you can already see where the cloud of the potential cloud of liquidity is. You can already see that it's to the top side because there are a lot more sell orders than buy orders. So what does that mean? I've said to you already, there are people that are in this already. This is actually live price, by the way. So there are people, and this is a daily chart, but there are people probably over here who are selling or who have sold already. They are currently in this and they are in profit at the moment. It's not really a bad thing, but they probably have their stop losses above that high. They probably have their stop loss over here. They probably have their stop loss over here. They probably have their stop loss everywhere because there's millions of people, right, that are getting short in this. And then again, since price is over here right now, because you can see it's Saturday that I'm recording this, as you can see on top of here, and this closed on Friday, right? So what would happen is that if price had to potentially start going long, people will look at this part over here. They would look at this and say, oh, that was the last high. So if price had to return over here, I'm going to look to go short. I'm going to sell it, right? Again, and that fits into those 62,000 orders or 62,000 positions. And then the third one, like I've said before, is that when price is increasing or if it had to increase, people are saying to themselves that this whole move down here, it's time to sell now. So I'm going to average every single out. I'm going to put all my orders over here. I'm going to put my orders over here. I'm going to put my orders over here if it had to continue. And I am not going to put a big lot size. I am going to average them out. So I'm going to take one part of the cake and I'm going to split it up into different orders. So then you have this cloud of liquidity, you have that cloud of liquidity, and then you have that cloud of liquidity. And you can already see why that this pair is going to continue going long. And that's my bias. It could fail and still go long or go short, and I could be wrong, and then you walk away from this market and fine. I'll probably come back to this pair maybe in October, November, or December this year, and then we'll see where the price is on this market. But that is the bias that I'm looking at on this pair, is that it's going short according to retail traders. And then when I look at this, right, this is my favorite thing, the institutional sentiment. It's painting a different story. Now, it's currently bearish on the intraday, so that's like a short-term thing, because you can see on this daily time frame, and you can see on this candlestick over here, it is bearish. And you can see that the intraday, it actually reads on a shorter term basis, because what has this thing done since from like the 15th of July until the 12th of August? So maybe like 2-3 weeks already. It's gone short. So you can see why that this is not 100% red, but this daily is showing green, which is saying that fundamentally and on a longer term basis, it has proven to go long. And you can see from this that it's made increasing protected highs, and price has not returned to these areas, which is showing you that it's a bullish market. It's look at the price from February this year until now, July. It's increased in value. But then this part of a year is what this intraday is reading. And this is what I mean by understanding what it is doing versus what it wants to do. It wants to go long. What it is doing is that it's bearish. So you can understand over there. And if you had to go in different time frames, you'll see that there's a bearish market across the board. But then that does not mean that this whole thing is bearish. It's still going long. But in the short term, it's bearish. But long term, it's bullish. So this is why this trend will ultimately sustain itself and still go long, because of that cloud of liquidity that is sitting above price, because people are going short on this. So hopefully you guys understand what I mean by this right now. I hope this makes sense. And if it doesn't make sense, then just pop a question on DONSLUVSFX Instagram account. Like, I like it when people interact with me. It's fine. Like, people, if you want to trade, the only way to actually learn this stuff is to actually open charts and actually engage with me, or engage just by looking at charts. Or just, you have to get stuck into some work and do this stuff. You cannot say, I want to be a doctor and then learn in a day and be like, okay, I'm a doctor. It's the same thing with trading. It's the same thing with learning how to play piano. It's the same thing with learning any single type of skill. Like, it requires dedication. It requires you to actually sit down and actually do some tedious work and actually look at charts and actually understand, okay, what is happening? Because this is my point about what I'm doing on this channel. I'm showing you how price moves, and I'm showing you that the way in which price moves, it's the same on any single asset, whether it be forex, crypto, stocks, indices, cotton, a market that shows the price of 2-minute noodles, or I don't know, think of any single market in the world. If you actually understand how price moves, and if you understand the nature at which price moves, you're going to be a powerful trader. And that's my aim on this account. So, clouds of liquidity, I've explained it. Hopefully you guys understand. And if not, just pop a question on the DONSLUVSFX Instagram account. It's a public account, so hopefully you guys can find it. But anyway, cheers.